Management Accounting Part 9 Special Orders. This is Ken Boyd, the owner of St. Louis Test Preparation. Here's our email and our phone number. You'll see our website and our YouTube channel later on in the presentation. I want to talk about a new term, incremental cost and revenue. And we'll start going in that direction by talking about a term we saw before in Management Accounting 8, relevant costs, costs that matter. Another way of saying that is costs that change when considering among different decisions. Those are relevant, those are important. That takes us into incremental cost and revenue. These costs and the revenue only occur if the company takes on new business. So let's go to an example here. Standard Towel Company manufactures premium towels, and this is their financials normally before they get a special order. They make 100,000 towels. We have per unit cost in one column and the dollar totals in the other. So their sales, $10 a unit. They have direct labor costs to manufacture towels, $3.50 a unit. Materials, probably cotton and other materials, $2.20. Factory overhead, $110. Selling and administrative expenses, $2.20. So on a per unit basis, they're selling towels for $9. They have selling towels for $10, excuse me. They have total expenses of $9. They have operating income of $1 a unit, which is $100,000 at 100,000 towels sold. But then they get a special order, and the key here is to understand that when you get this special order, you can't simply look at the sale price per unit and come up with whether you're making a profit or not. So Macy's approaches with a special order. We'd like 10,000 towels, but we're only willing to pay $8.50 a towel rather than $10. You should know that your cost is not the $9 a unit that you figured out beforehand. Let's look at the detail here. Going back up, here we go. So it's $850 or $85,000. That's your new revenue number just for the special order. Those variable costs, direct labor and direct materials, you're going to incur for the additional 10,000 towels. However, your factory overhead and your selling and administration are going to increase by $5,000 and $1,000 respectively. The key to this problem is that the $110,000 that you've already incurred in factory overhead and the $220,000 in selling and admin has already occurred, and that is not relevant to your decision. Those costs, the 110 and the 220, related to the sales that happened before. So the only thing you consider is the increases. If you produce the additional 10,000 towels, you get a total of 5 plus 1 or $6,000 in additional costs here in these two lines. But if you don't produce the additional 10,000 towels, you don't incur these costs. So the only relevant amounts for factory overhead and selling and admin is $6,000. As a result, you'll see that our special order is actually profitable, because another way of thinking about this, you've already sunk in money for factory overhead and selling and admin. If somebody comes to you and wants to produce more towels, and the amount of money you have to spend on these non-variable costs is minimal, then why not take the order? If we look at our financials after the order, after the special order, we're combining the financials before in this column, the special order in this column. You'll see that overall we're better off. Instead of a profit of 100,000, we've got a profit of 122,000. So you need to think about the factory owner who's incurring these costs every month. And if somebody says, produce more goods for me, but I want you to produce them for me at a lower price, you may be able to take that lower price because of some of the costs that you won't incur again when you take the special order. As a wrap up here, I've put a homework question, and as always, you can stop or rewind this video to get information above the screen to help answer the question. And you can email me at Ken at stltest.net for the answer. Let's assume Bloomingdale's approaches Standard Towels with a special order. They want 30,000 towels at an even lower price, $7.50 per unit. We have the same variable costs. The factory overhead and the selling and administration will increase. I've got a typo here by 5,000 on the bottom one here. Let me fix that. So make sure you pick that up when you work this question. And the question is, would this order be profitable in this scenario? That's the question I have for you, and you can email me again at this email address to find out the answer. That's the end of Part 9 in Management Accounting. You can find Part 10 on YouTube. Again, our YouTube channel, Ken Boyd STL, all one word, where you can subscribe. We have a complete list of all our videos on the home page of the website. To register for live tutoring, one-on-one live chat sessions, stltest.net is our website. Here's our email and our phone number. Thanks very much, and we'll see you next time.